Dixon here, and today I'm going to be talking to you about how to protect yourself before your governments go bust. I'm going to cover three things. The first thing I'm going to do is how to detect whether your government is going bust. Secondly, what they are likely to do if they go bust. And thirdly, how to protect yourself. I attempted to record this yesterday and I was in flow, and then I was speaking to myself for about 25 minutes. So I'm re-recording, and people were asking, you wrote the book over a decade ago, Bank to the Future, Protect Your Future Before Governments Go Bust, but how come I haven't seen a video on you talking about what to do when governments go bust? So that's exactly what I'm doing. Thank you for the tweet, and very good point. So let's jump straight into the content. Just before I start, people ask, why are you doing this in the gym if you're a finance guy? I create daily content as an incentive to work out. You hold me accountable to working out. I produce content that change your financial future. So let's jump straight in. So protecting your future before governments go bust. The first thing to detect is, how do you know if a government goes bust? What does that mean? Well, a government going bust means that it's operating out of a place of insolvency and then goes for bankruptcy. Insolvency means that it can no longer, it has far more liabilities than assets. So on a basic business and a personal statement, you would have your assets, which is the things that you own, like cash and houses, and you would have liabilities, which is a thing that you owe, like debts and mortgages. And then you would have cash flow, which is cash that comes in that can service those debts or purchase those assets. And that's exactly how a government works in its simplest form. They have assets, which is any assets that the government owns. It has liabilities, which is any debt that it needs to repay, mainly through the bond market. And it has cash flow, which comes in from tax collection and seigniorage. Seigniorage is the process of creating cash and coins, which are created normally by a mint. So let's say you had a $10 note, it would cost you about 3 cents to print that note. And then there would be $9.97 seigniorage income, which reduces the amount of tax one needs to pay. And so money creation is a process of adding cash flow and ending up with more assets. However, the government decided to outsource money creation to the private banking sector. And so rather than having seigniorage income, it has to rely upon tax income. And then if it doesn't generate enough tax income to pay off its liabilities, then it has to borrow the money, and it tends to borrow the money through the bond market. It could, that's really the way that it works, because they have outsourced the seigniorage income, as it were, to the private banking sector. So the private banking sector has created what I call the world's largest regulated Ponzi scheme in partnership with government, which is the dollar, the pound, the euro. What that means is that when you borrow money from a bank, the bank creates brand new digital currency, called a digital version of the pound, that they put into your account, and that is brand new money that increases the money supply, and they benefit from the interest repayment from that newly created money, rather than the government receiving seigniorage income. There is another way, is that they can outsource that to the central bank as well. And so the central bank creates, through quantitative easing, some new money. And then the government issues a bond, which is a loan, essentially, that can be bought and sold on a bond market and pays a fixed interest rate. They can borrow it from the central bank, in which case the central bank benefits from this new asset of a government loan. Now, I know that's a whole load of jargon, but in simple terms, just trying to get the mechanism of some very complex subjects out so you can define. So what does it mean for a government to go bust? Well, you could be operating out of a position of insolvency, where you have more liabilities than assets, but if you can generate cash flows and restructure your liabilities, i.e. your debt, then you can continue without going bankrupt. And bankrupt is the process of defaulting on those liabilities. So if a government defaults on their bonds, then they are bust officially, and they would need to go through a liquidation bankruptcy proceeding, or a restructuring where they figure out what they're going to do with their liabilities. And that's when big organizations like the International Monetary Fund, World Bank, Bank of International Settlement start seeing if they can restructure a government's debt. But why would they do that for free? It's not a loan. It's not a charitable donation. It is a loan, and it is money created through the International Monetary Fund, using the magic wizardry of finance that I've discussed for over a decade on this YouTube channel, and you can go back to some of those videos. Right. So now we know what it means if a government goes bust. It means that they default on their debts. Now, what would it look like? And what would they do? So the way that it would look like, a government's going bust when they have to pay excessively high interest rates on their bonds. And the reason they have to pay excessively high interest rates is because they are given a credit rating from an agency like the S&P, from Standard & Poor's, from Fitch, from and various other agencies that would attach a credit rating to that government's debt. Now, if it goes up high, it's because the credit risk of lending to that government is higher, and therefore to attract investors, the rules of markets are that the higher risk, the higher the return, the lower the risk, the lower the return. So the lowest paying bonds are things like loans to the US government, because it has the highest credit rating in the world. And then you have more exotic Latin American countries and that have been through sovereign debt crisis and before, and therefore they have to pay higher returns in order to entice investors to take higher risks. And in an environment of high inflation, investors need to look for bonds that pay more than inflation, because most people are currently lending to the US government and the UK government and the European Central Bank, Europe, at a loss, because they don't want to leave their money at a bank, because when you leave money at a bank, remember, it's the world's largest regulated Ponzi scheme. We operate off a global position of insolvency. There is more debt in the world than there is money in the world, and therefore, when you have more debt, you have to increase the money supply in order to pay off the debt, and then that leads to the three outcomes and the three choices that countries have to avoid themselves going bust. So, in summary, that a government is headed in a bad way when their interest rates on lending to them is increasing, their credit rating is downgrading, and they need to choose these three outcomes. So what are they likely to do? Well, they can choose three ways of solving this problem, and we'll give examples from each country, and then we can move over to what you can do when this happens in your country. So the first option is operate a Ponzi scheme. For those of you not familiar, a Ponzi scheme was popularized by Charles Ponzi, who was a fraudulent financial engineer that offered an investment product whereby he would promise returns to investors. And so investors would invest into that investment product, and then it would promise a return, but it didn't actually invest any of that money. And so it took that money and said, right, in order to pay off the promises that we gave to old investors, I'm going to find new investors. So it would find new investors, and it would take some of that money and pay off old investors. And then it would generate new obligations to those new investors because it promised returns to them. And so then it comes through a third round and a fourth round and a fifth round, and it keeps paying off old investors with new investors' money, but incurring new obligations to new investors. People get the definition of Ponzi scheme wrong all the time. They just refer it to anything that they think is a bad market that's going to crash, or something that is not paying returns. But a Ponzi scheme is a very specific definition. Eventually, with a Ponzi scheme, because no returns didn't exist, you reach a stage where you have promised so many obligations that you cannot find investors at a fast enough rate to pay off those old obligations, and it goes exponential, and eventually it goes bust. And they have to come clean, and then Charles Ponzi goes into prison, and everybody starts calling everything that goes wrong a Ponzi scheme, even though but governments are operating Ponzi schemes. Currencies are Ponzi schemes. And so if you look at fiat currencies, if you study fiat currencies, which I'm geeky enough to have done that, you'll know that there are a series of Ponzi schemes that fail. And so every single fiat currency in history has failed. And the last two in our lifetime, in any generation that we're familiar with, were the pound and the dollar. Now, the pound was a bit of an anomaly because it was the longest standing Ponzi scheme that existed. It was later replaced with the dollar through a gold standard that later became a full Ponzi scheme with no gold standard. The gold standard was a way of trying to regulate the Ponzi scheme, which is if you create too much money, then people can swap that currency for gold, and therefore gold flies out to other currencies and you can't create more gold other than mining into the ground. And if the price goes up, then people mine more gold. And if the price of gold goes down, then people mine less gold. And it sort of has, properties where you can't increase the supply, but you still can increase the supply by finding more gold. So they use that as a way of regulating, the Ponzi schemes. But that was all removed, and so we entered into just a pure Ponzi scheme for every currency. The British pound lasted about 300 years because it was backed by the world's largest naval fleet, by essentially ships and cannons and guns and violence. Today, the US dollar operates off the largest defense expenditure, i.e. guns and violence, still. So you can, that's how you get yourself to be in a position where other countries use your currency to prop up their Ponzi schemes. And so that's the first thing you can do. You can just simply refinance. So as long as you have a credit-worthy government and people are willing to lend money to that government, and at the state, an example is the United States, the UK, Europe, major, most developed countries that operate off this Ponzi scheme. They can issue bonds essentially, and they can pay off old bondholders with new bondholders' money, and just continue that Ponzi scheme. And so as long as people are willing to lend to the government, and at the moment in the US, because they don't want to park money in a bank, and because they've collected so much money off you from your pension, they are obliged to lend to governments to try and generate below inflation yield. And so they're lending at a loss just because they've got all this money that you've given to them for your pension contributions, and they have to do something with it. So they'd rather lend it at a loss than leave it at a bank where it's subject to bank bail-ins and bank bailouts, and a deposit insurance scheme that only covers a small amount of money, that only has 1% reserves. So therefore, if more than one major bank goes bust, then the deposit insurance collapses. And we've seen that deposit insurance has collapsed in the past in the US. Before FDIC, which is the deposit insurance at the moment, they had SLDIC, which is a savings and loan deposit insurance compensation scheme. And now they had to repackage it when it went bust, and they replaced it with FDIC. And so insurance is another, can often operate off another Ponzi scheme. So you can insure a Ponzi scheme with a Ponzi scheme. And so this is the financial system that we operate of. And as long as new investors are willing to lend money to old investors to pay off old obligations, then that system can continue for a long time, but eventually you hit a level where the debt is reckless. And so we see that right now in the US. You've heard of a government shutdown, right? So the US is experiencing government shutdowns. What this means is that in the US, they implemented a debt ceiling, which means that the government's not allowed to borrow more than that. And if their liabilities are greater than their assets, and their obligations, then they're operating out of a position of insolvency, and therefore they need to get Congress to vote to increase the debt ceiling. And now, faced with the prospect of the country's government shutdown, you tend to get Republicans that don't believe in increasing government expenditure, even though almost all of them do. Trump increased government expenditure in the US more than most. So therefore, because it's a Ponzi scheme, even if you don't believe in increasing government, and you're more Republican than Democratic, or you're more right than left, or you're more, free market than socialist, then you tend to come from an ideal of not wanting to refinance the Ponzi scheme. However, when faced with the prospect of a 4-year cycle, where if you don't refinance the Ponzi scheme, everyone's going to remember you as the person that sent the country bust, everybody becomes a Democrat, a socialist, and eventually, as you've seen in previous videos, merges with this Ponzi scheme away from free markets to socialism to communism because of wealth inequality and previous videos. Check out previous videos on how to know whether your country is in communism or free markets. Right, a few tangents there, but let's get back to where we were. And so that's the first way of doing it. You can refinance the Ponzi scheme. The second way of doing it is you could use financial innovation is a way. And what we're seeing at the moment is countries using financial engineering in order to restructure. And so one of the reasons that I'm very excited about the El Salvador government at the moment is because they're deciding to engage in financial engineering instead of what I call the final alternative, which is hyperinflation. So these are the three that you've got out there. So you have operate a Ponzi scheme, hyperinflation, or financial engineering are the three options. Let's have a look at hyperinflation. So hyperinflation is the process of deciding to meet your liabilities and obligations to both your country and your debtors by printing more of a currency that you control. And so this has been a problem for many countries over history, whether it be European countries like Germany after the war, or whether it be South and Central American countries at the moment after the Latin debt crisis. And you see this in countries like Venezuela, Argentina, Zimbabwe, Lebanon more recently, and other countries as well. You can have a look at an index of inflation, hyperinflation. Hyperinflation means, and it is no joke, it's a very serious subject. So Jack Dorsey recently tweeted out that he's believes that US is headed for hyperinflation. Got a lot of criticism, but hyperinflation is seriously no joke. You just need to look at the countries that are experiencing it and the impact it has on the middle class driving into poverty and the wealthy becoming incredibly wealthy by getting on the right side of hyperinflation. And it wipes out economies, it's destructive, it kills, it is a nasty, nasty piece of work. Jack Dorsey said that the hyperinflation has come into the US, and shortly after he left Twitter to focus on Bitcoin and turning Stripe into a Bitcoin company, launching decentralized exchanges and decentralized social networks all built upon Bitcoin, because he has a lot of belief in the fact that hyperinflation is coming to certain countries, and therefore we need to build out the infrastructure to protect from hyperinflation around the world as fast as possible. So hyperinflation just simply means that when you print money, inflation is caused, in my perspective, and economics hasn't solved this one, but from my perspective, two things. It is factoring in the debt from the Ponzi scheme, where it creates lots of inefficiency in money creation, and it is also too much money chasing too few goods, which is what we're experiencing at the moment. So there's a lot of debt, so people have to factor in all their debt into their pricing of goods, and because so much money was created and given to people, they're looking for ways to spend it, and there's a competition to spend that money. This puts up the prices of the production of those goods, because everyone's putting up their prices, and therefore they have to put up their prices, and you enter into an inflationary spiral that if you print too much, then you end up in hyperinflation, which is where you earn money, and then by the time you receive that money, it buys significantly less goods than you could purchase before, and your savings are essentially depleted, destroyed, if you hold them in that currency, and eventually even those that were on a good path in the middle class, they either find themselves on the less than 1% or 1%, that invested on the right trend of hyperinflation, or they end up on the wrong side. And in Lebanon, you see the complete destruction of the middle class, going below the poverty line, and economies being destroyed. It seriously is no joke, and it is a nasty thing that is to be avoided at all expenses. And people do need to protect themselves from such an environment happening. I don't want to fearmonger, but it is really a nasty thing. The complete destruction of all your savings and everything you've worked for, just because you didn't make the right moves financially, is a fate that I wish upon nobody. So that is the second way you can do it. Now, what happens when you create hyperinflation? Well, you then have to use the third option, which is financial engineering. So if you create too big a Ponzi scheme and you end up with too much debt, and you end up with the risk of hyperinflation, because when you increase the value of your currency, it has a chain reaction on inflation, then your only option is financial engineering. And so financial engineering is where you take a look at the world and say, what if we use the best of different currencies for different use cases? And we built an economy based upon either two things. One, other central bankers and their policies, or a money supply that has no central bank and is completely understood into the future. And right now, those are the two things that El Salvador is doing. El Salvador is saying that the Federal Reserve is doing a great job of decreasing the value of the dollar over time. And because of that, it means that it's great for people to spend, because you want to, Gresham's law is that good money takes out bad money, because you want to spend money and save good money, and therefore you spend money that goes down in value as fast as possible. But if everyone prices in a fiat currency like the dollars, in El Salvador, if people think in dollars, then it becomes a great unit of account and medium of exchange, and it slowly goes down in value, and therefore people can manage their expenses through that mechanism. What if we can Bitcoin legal tender so that people could spend dollars and say Bitcoin, which is money that's designed to go up in value because it has a fixed supply that can't change. And therefore you have the freedom of money you can own, money you can spend, and money that has a fixed supply for savings, and money that you can't own, money that you can't spend if they're sanctioned, and money that can be used at the whims of the Federal Reserve in terms of its supply, so that people can spend it and use it as a unit account, and then you interchange between the two. And then you take the Ponzi scheme, which is the sovereign debt, and you say, well, what if we paid it off with a new Bitcoin bond product whereby people could generate returns? We would buy Bitcoin using the bond, and we could do the strategy of borrowing money in money that goes down in value and saving money with money that goes up in value at the sovereign level. And if Bitcoin does what it has done for individuals and what it has done for companies over the last decade, if it does that for countries, then you could be in a position where you could completely wipe out the Ponzi scheme using money and a wealth effect. And that is why El Salvador is, without a doubt, the most interesting country in the world. So let's recap what we've done here. You know that your government is going bust when the cost of borrowing is increasing and the credit rating is going down. And therefore, you know they're on a bad path. And if they're printing money, then they end up in hyperinflation. So they fix it with a Ponzi scheme, with hyperinflation, and then eventually financial engineering. Two choices with financial engineering. You go out to the International Monetary Fund, the Bank of International Settlement, and the World Bank, and they create the money for you, and you end up deep in debt, in a sovereign debt crisis, to the International Monetary Fund, the World Bank, because they create the money and then they lend it to you. And so you then have loans that are tied, and you lose complete sovereignty of your country. Or you decide to restructure it and say, well, let's use the Fed for what they do, create money that goes down in value, and yes, use Bitcoin for what it is designed to do, create money that goes up in value in the long term over time. You can't have Bitcoin doing everything because it has such extreme volatility when goods are not priced in Bitcoin. And you can use goods being priced in dollars and people then can use it as a medium of exchange. And so that, I think, is the model that more and more countries are going to follow. So if El Salvador gets rid of a Ponzi scheme and prevents hyperinflation by using Bitcoin and financial engineering, and then shows that you can attract people to your country, don't tax them, just give the value-added tax, so as they spend, but don't do capital gains, allow people to make profits, don't do property taxes, allow people to own assets, don't do payroll taxes, allow companies to give people jobs without being disincentives, and don't give income taxes, allow people to spend less than they earn and invest the difference in legal tender and money that is designed to go up in value over time. So if this can work for the individual people of El Salvador, and then it can work for the companies in El Salvador that have to accept Bitcoin as legal tender and dollars, and it then works for the government at the sovereign level, and then they realize they don't need a central bank, then we have created the third and most interesting model. And that is why on my YouTube channel, you see me going absolutely berserk and absolutely nuts around this concept, and trying to do everything I can do within my power to support this initiative and show the world that there is a bottom-up movement. So I spoke at the very first Bitcoin conference in the world. It was about 40 to 50 people in a room, and we were all, computer geeks. I was one of the only finance guys with Max Kaiser, and we started investing in this ecosystem and industry, created Bank to the Future so others could invest in the companies that were building this infrastructure and ecosystem. And when I wrote the book, Bank to the Future, Protect Your Future Before Governments Go Bust, I outlined how to protect yourself, a forecast of financial technology. It was the first published book in the world to include Bitcoin. It went through things like how the metaverse would generate virtual currencies and assets, and a forecast around modern monetary theory and how to solve the debt with a communist central bank digital currency. It wasn't called a central bank digital currency at the time, but sharing that was the only way unless Bitcoin could get traction and various other things. I'm not pushing you to buy my book, by the way. So there's two things you can do to protect yourself. So we said the first thing, how do you know whether your government's going bust? The second thing, what will they do if they do go bust? And the third thing is, what can you do to protect yourself, which is the title of the video. Well, recently I immersed myself in free content. You can go to retirementplanb.com, and I shared with you exactly how I'm protecting myself with over 15 hours of completely free content. Take my challenge, go out and immerse yourself in that content, and feel free to borrow and steal and do whatever you want from that content. Also, if you'd like to get a free copy of my book, my publisher gets paid when you buy it. If you want to buy it, I don't get paid. But you can have a free copy of a PDF at retirementplanb.com/book. So there's two things you can do, and those are two ways, and I will share with you, there's not nothing in there that I cover that I'm not doing for myself to protect myself before governments go bust. So I hope you enjoyed that. This is the second time around, and I'm literally going to not be happy if the sound didn't come through for a second time. There's nothing more that I hate in the world than having to do things twice. But I hope this content came through. It worked. There's no censorship, and YouTube allowed you to experience the importance of this topic. So do me a favor. If you think that this is valuable to more people and more people need to understand this content, and you have people that you care about that would be interested, please do like, please do share, please do retweet, please do get this content out to as many people as possible. I'm also I want to get past that 100,000 subscriber mark. And so if you're not a subscriber, I will create content each and every day to make sure you're on the right side of this change, and for your friends and for your loved ones if you help them subscribe. So hit that subscribe button, hit that bell symbol, hit all, and YouTube will email you each and every day when I go live. and you can hold me accountable to my workout so I've got more energy so that we can change the future of finance together. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some people are going to be on the wrong side and get hurt. Others are going to be on the right side and do incredibly well. I want you to be on the right side of that change, but I want us to do it with peace, love, unity, bottom-up movement, and I will see you on the other side. Peace.